This is our Forex blog for January 26, 2012. And like most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. Today you can see that yesterday's dollar weakness continued into today, and the daily, weekly, and monthly trend is quite down. And when you see a pattern of extreme weakness at and above the 80 level, followed by less strength than weakness, especially something where it shows 1/2 to 1/3 the previous peak, that weakness is likely to continue. So coming up to around 4 right here, it's pretty high probability, in my opinion, 70%, 80%, that the dollar's going to go down. It might only go down for 15 minutes, and sometimes it can go down for another 3 hours. You never know the duration of the next wave down, but usually it's going to go down. So coming up to 4, which currencies were very strong? Let's scroll back and look. The euro didn't have a lot of strength. The Australian had a lot of strength earlier, followed by no weakness. The New Zealand had a lot of strength, but then it had quite a bit of weakness here. So really it would have been either the Swiss or the Australian. So coming up to 4, the highest probability trade is buying the Australian dollar. And as we look at this chart right here, this currency just broke out above the previous day's high. Here is the next resistance area, the monthly pivot level, my Fibonacci profit target level that I do the night before. That most of the time is the high, maximum high or the low of the day if the market makes a big move. And you got a nice little pullback right here, not much. I prefer 15 pips. This one pulled back maybe 12. Actually, it did pull back about 15 pips and went sideways. And typically once it pulls back and goes sideways, you buy the breakout right here. You would be long this trade right here at 39. The stop is just a pip or two underneath here. So you're not even really risking 10 pips. And you always want to draw your fibs on the last wave. And the first and second fib target are up there, along with my longer term Fibonacci analysis, which, when this Fibonacci profit target level is way above the upper white containment bands, usually it's the maximum high of the day. So you can see you got in this trade and it quickly shot up. You can get out of half the trade when it kind of goes sideways right here and stalls at 73. And most of the time it's not going to go above the 1.618. So if it goes above here and then comes back down, you'd want to get out somewhere around 81. So your average exit might have been around 75. You're in this around 40. You made 35 pips. Again, while risking only 10. And that's the key to trading. Small losses, bigger wins. Now, anytime you see a double or triple top later in the day where the market is at a major resistance level, especially my Fibonacci profit target levels, you can look for some quick counter trend trades. Most of the time, the market will work its way back to the hourly. So if you were to sell right here around 1.0670, you have the hourly down here at 32. You have a potential of 40 pips. Now, sometimes the markets are so strong it pulls back a little bit and then shoots back up. In this case, it pulled back and went sideways. And when this happens, you want to, get out of half your trade here and then the other half when the trailing stop got hit. But notice the same exact pattern that I showed you on the currency meter. Extreme weakness, a counter trend trade, when it has 1/3 or even 1/2 the previous move's momentum. It could have been all the way up to about 75 here. It's very likely to continue down. So you draw your trend line on there, you go short. Here's your Fibonacci profit target. But keep in mind, this is a very strong currency. It's very likely, most of the time, it finds support here at 34. So you'd be short at 56 for about a 20 pip profit. I would have personally got out right here and not considered selling this just because of how strong it was earlier. It's one of the strongest daily, weekly, and monthly trends. Plus, one of our systems is waiting for a pullback to the hourly. Typically, those trends continue. Let's look at some of the other patterns today. We have very strong euro later in the day, followed by less weakness. That trend's very likely to continue. Now, unfortunately, the daily and weekly trend are not quite as strong as the Australian is, but you can still trade these patterns. So at 7, you could be looking to buy the euro, and unfortunately, the dollar was strong right before 7, but the yen wasn't. So right before 7, you'd want to be looking to buy the euro yen. All right, so here's 7. Now this currency just broke above the previous day's high. It pulls back and finds support right here. Typically, you're going to want to buy. One of the downsides of this is the upper containment band is your profit target. Most of the time, the price doesn't go above there, so that's up at 19. If you bought this right here, you have a 20 pip potential profit. I would have probably got into this trade. As soon as it moves up a few pips, I always move my stop up, and I always try to keep my stop a pip or two under major support like this. So I would have got stopped out here with maybe a 5 or 6 pip loss. Got long again right here because notice there's not a whole lot of extreme weakness. It doesn't hit the 80 level. In this next trade here in at 01, it comes up to the upper containment band, and anytime I have a loss in a currency, I try to get it back on the next trade. So I probably would have got out of this trade with about a 15 pip win, and minus the loss there had about 8 or 9 pips left over. The New Zealand also shows incredible strength, followed by very little weakness. So you could be looking to buy this all day as well. Especially earlier today, the New Zealand was very, very strong, one of the strongest, and the dollar was extremely weak. Let's take a look at this one. This one has an added bonus of also being an NR4 inside bar pattern. When you see a narrow range pattern in one of the very strong currencies, when it's above its hourly moving average, and when the momentum is clearly extremely up, you want to buy the breakouts. Now, on a scale of 10 being the best, this breakout right here I'd give a 5 or 6, only for the reason that the previous day's high is right above us at 93. If you went long right here, you have about a 13 pip profit. And more than likely, I would have gotten into this trade, and because of the fact that it's above the upper containment band, I would have got out of this with a small profit. But these narrow range patterns tend to lead to bigger trends. So when you get a nice move up, I would have missed the remaining 15 or 20 pips. You got this pullback trade right here. Notice extreme strength on the way up, no weakness on the way down. I would have bought again here. I, of course, like any human, get mad when I get out of trades too soon. But I would have taken this trade. As soon as it starts moving my way, I move my stop up. And because it's above the upper containment band, I'm going to draw my fibs on the last wave like this. And more than likely, I would just get out of the whole trade right around 19 here. I would have been in this trade at 97. It's about a 20 pip win, and I would have made about 10 pips on the first one. So that's 30 pips on 2 trades. The maximum on those 2 trades would have been 50 if I would have held another, 15, 20 pips on this one. But, you can only trade what experience and probability show you. If the majority of the time when above the upper containment band price stops at a resistance area, usually the price doesn't go more than 10 to 30 pips above the upper white band before it reverses. So when it's up here and you see the strength start to fall off, again, you can look for some counter trend trades.